New jobless claims jump to a 6-year high in the U.S. Many companies are cutting back given the faltering U.S. economy. The number of newly laid off people signing up for jobless benefits last week climbed to its highest point in more than 6 years as companies cut back given the faltering, weakening economy. The Labor Department has reported Thursday that new applications filed for unemployment insurance rose by a seasonally adjusted 7,000 to 455,000 for the week ending August 2nd. The increase left claims at their highest level since late March 2002. The latest snapshot of layoff filings was worse than analysis expected. The data disappointed Wall Street. Stocks fell. Meanwhile, the 4-week moving average of claims rose to 419,500 last week, the highest since mid-July 2003. The number of people continuing to collect unemployment benefits went up by 31,000 to 3.3 million for the week ending July 26. That was the highest since early December 2003. Among the companies announcing more job cuts in late July, early August were General Motors Corporation, Weyerhaeuser Corporation, and Starbucks Corporation. Bennigan's Restaurants, owned by privately held Metro Media Restaurant Group, are now closing, driving even more people to unemployment lines. Squeezed by high energy prices and fallout from housing and credit troubles, employers clamped down even more on hiring in July. The nation's unemployment rate jumped to a 5-year high of 5.7%, the government has reported. Employers cut jobs every single month so far this year, driving up losses to 463,000 plus and climbing rapidly. Economists expect another 500,000 jobs to be eliminated this year alone. The jobless rate could easily hit 6.5% by the end of the year, or somewhere along there. The country is getting pounded by many negative forces, the Federal Reserve has said. Labor markets have softened further and financial markets remain under considerable stress. Tight credit conditions, the ongoing housing contraction, and elevated energy prices are likely to weigh on economic growth over the next few quarters, if not the next year or more, the Fed has said. The U.S. is in a lot of trouble, and everything is connected. Everything is connected to who the president be at the present, and all the things that have happened before, all the way back to World War II and the dropping of the atomic bomb. All this is connected. The war on terror, or the war in Iraq and Afghanistan, and all the other things, yes, and all the other things that have gone on. Everything is connected. And the incredible plunging dollar. Long considered the bedrock of global finance, the U.S. currency is now foundering. The plummeting value of the U.S. dollar has made stark headlines over the past year as politicians and economists have debated the causes and consequences of the once mighty greenback's fall from grace. From Wall Street to Main Street, and all the way around the world, Americans are reckoning with the impact of the declining dollar and what it means for their businesses and daily lives. Moreover, the weak dollar and other economic woes, such as the subprime mortgage crisis, together convey a symbolic message to the world, one that says confidence in the U.S. economy has been severely eroded. Of course, that wasn't always the case. Since the end of World War II, Americans had always assumed the dollar would be strong and a dominant force in global trade and commerce. But that was before the current economic mess. Now, the national deficit is soaring, and the euro, whose strength has taken many by surprise, has risen to challenge the dollar's supremacy. As a net debtor nation, the U.S. lives way beyond its means, buying and importing more goods from abroad than it sells, thereby creating a trade deficit, while the government spends a whole lot more than it takes in, leaving a huge budget deficit. That means the U.S. government is forced to borrow billions of dollars every day, much of it from China and Saudi Arabia and the central banks of other nations, by issuing debt such as U.S. Treasury notes to help pay for the budget and current account deficits. And yes, the U.S. national debt is rising rapidly. It's in the trillions of dollars now, and still rising. The overall impact, economists say, is that the global market now takes a much more cautious view of the relative strength of both the U.S. economy and the dollar itself. And there's no easy fix to fix all this mess. Meanwhile, for economists and policymakers, the lingering question is whether we should try to do anything about the anemic dollar at all. Some argue, theoretically, that market forces will eventually bring the dollar back. But this might not be true. There are limits, warns economists. If the dollar sinks lower, and at some point the Chinese and the Saudi Arabians and the Europeans say they don't want to hold dollars anymore, and they all rush to cash them in, then it could be a very, very nasty situation. Another Great Depression could be on the horizon for the United States of America. That nasty situation, when it happens, which is very likely, but it could cause a global run on the dollar, with nations such as China and Saudi Arabia trying to cash out of trillions and trillions of dollars held by its central banks. In turn, this might cause a serious rupture in the worldwide financial network and lead to major restructuring as central banks tilted toward the euro or another currency. These are very dire implications. Stocks fall on jobless data. Walmart sales. Wall Street tumbled again after unemployment claims jumped to a 6-year high, and Walmart stores Incorporated and other retailers reported more disappointing sales, touching off renewed fears that a pullback in consumer spending will damage the economy even further. The Dow Jones Industrials fell even more. Financial stocks also lost ground after insurer American International Group Incorporated reported that it lost more than $5 billion in the second quarter alone. A very steep decline. The concerns about a weakening economy always run to worries about the financials. And then you add some negative news to them on their own, and you've got what we've got today. Oil prices also went back up because it is peak oil. We are in peak oil now, and the end of cheap oil. The days of cheap oil are over. Anyway, America is in a lot of trouble, very serious trouble, and these are more signs, the end times, transition days, and there are many, many signs.